Welcome to Wales Tech Week 2021. Thank you to our partners. Enjoy the session.
Right, well, good afternoon and welcome to the Wales Tech Week. It's a fireside chat despite it being the depths of June and good 25 degrees outside, so the fire isn't lit. We did propose it be moved poolside, but that was rejected for all sorts of reasons. But welcome and good afternoon, Paul. Good to see you.
Yeah, thank you, Duncan. Yes, yeah, I think we did suggest it might be better to do something in a colder environment, but yeah, fireside chat sort of describes it, I think, pretty well.
It does. We had to make an educated guess as to what the audience would be interested in. So we've gone with a few topics, but there is a Q&A channel. So if there's a particular question that you would like to ask, or if there's something completely different you'd like us to talk about, please do use that to ask questions, make suggestions, and we will try to respond to those. What we thought we would do is just give an introduction to Paul and myself, just to put us in context and give you an idea of our experience and where we're coming from. And then we were going to talk a bit about the differences and similarities between corporate venturing and VC and DBW in particular, how they differ and what the similarities are. And then talk a bit about investment in the UK and in Wales in particular. This is Wales Tech Week. And then talk a bit about what we've seen in terms of how to succeed in terms of raising funds. And then wrap up with any questions or anything we haven't picked up halfway through. So I hope that'll be interesting and look forward to working through it. Paul, to kick off, do you want to give us a short introduction on yourself?
Yeah, thank you, Duncan. I was just looking at my diary. It's almost to the day. I think it's 25 years since I first got involved in venture capital. You sort of wonder where did the 25 years go? So I worked most of my career for a large US corporation, Dow Chemical, and about halfway through that, I was asked to look at setting up a corporate VC unit for Dow, which I did. And actually then ran that for over 15 years, investing both directly in companies in a broad range of sectors and also taking LP positions in funds. Then since then, I've worked independently, but most of the last 8 years, I worked as an advisor to the Department for International Trade, and DIT set up a specialist VC unit that really looks to connect investors from around the world with UK companies that are looking for funding. So if you like, it's a matchmaking service. And so I lead on working with investors for that program. And then I have a couple of other roles with an organization called Global Corporate Venturing, where I lead on an academy, which is actually now called an institute, that delivers interactive training workshops for corporate VCs. And also I'm involved with the GCV Global Energy Council, which is a grouping of corporate VCs that have interests in energy.
Okay, and the DIT role, which I'm sure we'll pick up more when we talk about the UK and Wales, but more generally, what is that? What does that involve at the moment?
Yeah, it really involves trying to stimulate the growth, or support startups by giving them additional access to VC funding from investors that are not local UK investors. So if you like, it enhances the availability of venture capital for UK startups. And we do that by firstly connecting with and developing relationships with investors around the world that actually have an interest to see UK deal flow and to invest into UK startups. And on the other hand, identifying UK startups that we think are at a level of maturity that they would be of interest to international investors. So that's what we do. We work on both sides of the equation and try and do, if you like, smart matchmaking.
That sounds suspiciously like increasing the competition for the deals that I want to go for. But I have to say, my experience is that a monopoly is a bad thing. You get better investments and better decisions, and better for the companies the more people that are involved. So actually, it's good to see other people being brought in to back businesses. So despite the competition.
Yeah, doesn't competition make us all stronger and fitter and leaner and everything else? So
that's the theory, but no, it is a good thing. I mean, I think the one problem I've seen is too many people having the same viewpoint. Actually, someone else coming in and saying something different, which may not be right, but it challenges you to think about what you're doing, and that, I think that's what VCs bring to businesses, a challenge. And I think it's only fair and right that we should be challenged ourselves. So that's good. But that's getting ahead of ourselves. Perhaps giving you a bit on myself. I am a deputy fund manager with the Development Bank of Wales. I've been in the industry for slightly less than Paul, 22 years to date. I moved up to Yorkshire at the end of the 90s and joined 3i, and then have worked in a series of funds since then. Most recently joined DBW 3-4 years ago, I think now, as the deputy fund manager for the technology ventures investments. We're a team of 16 based in Cardiff and Wrexham, but operating across all of Wales, investing in investments, technology investments, ideally ones with a strong IP. So we tend to look for technology businesses rather than technology enabled businesses. And we have a range of funds. So we have a seed fund that will start at a very early stage, potentially proof of concept. And then we have a more mature venture fund that will back them further. So the idea would be we would start with an idea, back it through several rounds of finance, and ultimately see it exit, whether that's through a listing or an acquisition at the end. It's quite an active team. We do 40, 50 investments a year probably. And over the last 10 odd years, we've invested a little over 100 million, and also brought in another 200 million of what we call matched investment alongside that. So it's busy, but it's a lot of fun, and it's continued being busy during the lockdown, which is good. So that's a bit about ourselves. I suppose just to set the scene and see where we are, it might be worth spending a bit of time talking about your background, Paul, particularly in corporate venturing, and how that is similar to and different from VCs, and also what DBW does as a business. So Paul, do you want to go first in terms of corporate venturing? What is it? Why do companies do corporate venturing, and what do they look to get out of it?
Yeah, I'm happy to do that. And maybe one thing I didn't mention, Duncan, is because of my my role previously with Dow, Dow's European headquarters is in Switzerland. So they moved me to Switzerland many years ago, and I'm still there now. But actually, I know that you're based in Yorkshire, and as I'm originally from Yorkshire, I'm in it makes me sort of a little bit jealous there. But so I think we've sort of juxtaposed our positions. On the question about corporate venturing and venture capital, corporate venturing, or corporate venture capital at least, is similar in that corporations take minority equity positions in private companies, but there is an important difference. You could say if I line up 50 corporate VCs and I ask each of them to describe their program, you'll have 50 different programs because no two are exactly the same. But generalizing a little bit, corporates will usually invest corporate money either off the balance sheet themselves, or maybe they set up a separate vehicle, but it's usually money that's sourced from the corporate, although there are some exceptions to that as well. And then they will invest as VC funds do, and very often they're investing in syndicates alongside VC funds, in companies of interest. But we can maybe get into that in a bit more detail. But whereas a VC fund is really they're driven purely for financial return, a a corporate VC is looking at usually financial return. That's not unimportant, but really the real driver is strategic, and they're looking at investing in things that have potential strategic value to the corporation.
So presumably a particular corporate will have, if you're looking for funds in a particular sector, you should be looking for the big corporates that are likely to be interested in that, albeit it could be looking to the future and where their strategic interests will be at some point in the future.
Yeah, I mean that in itself is a key question for corporates. So, what are you looking to invest in? What are you focusing on? Are you looking to invest in things that are relevant to your business units today? So that's sort of very easily understandable. Or are you looking at sort of Horizon 3 and beyond opportunities that may help guide or form or be a base for new business opportunities for your corporation in the years to come? Which is harder to relate to the day-to-day business today, and that's a discussion that corporates go through all the time, corporate VCs, and sometimes they do a combination of those. Certainly, when you're new as a corporate VC, I think it's pretty difficult to do the Horizon 3 stuff. It makes more sense to invest in things that are a little closer to what the corporation understands, and as you develop your credibility and track record internally, you maybe then have more leeway to invest in things further out. But yes, usually one way or another, what a corporate VC is investing in should have some potential or near-term strategic value for the corporation.
I mean, we've partnered with several corporate funds over the years, and continue to do so. And I mean, the thing we always found was if there is a strategic angle, then their appetite is very strong. And I guess their view on valuation and terms is kind of tempered slightly by that. If they're looking to the future and the value to them, and therefore they're perhaps slightly less interested in value now, whereas a VC will be looking at it and saying, how can I make my return? And when I exit, that's the end of it. There isn't an ongoing relationship.
Yeah, I mean, interesting. Corporate VC has matured and developed an awful lot, and the GTB Academy, or now called the GTB Institute, that I mentioned in the introduction, that's part of the role of that institute, is to help corporates become more knowledgeable, more professional. But certainly in the past, corporates sometimes had, and sometimes unfairly, sometimes fairly, a reputation for sort of being dumb money. So they were interested strategically in deals, and therefore they would overpay. I believe that happens less today, and corporates do want to be, they want to be, serious investors, and they want to invest on the same terms as VCs. But I do remember one of the funds that I invested in. It was a fund in France when I was with Dow many years ago, and they were talking about how they value their portfolio, their portfolio of current investments, and they said, we value it at the valuation of the last round of funding, unless something material has happened since to cause you to write that valuation up or down, which is fairly standard. They said, but unless that last round was led by a corporate VC, in which case we write the valuation down by 25%. So suggesting that those dumb corporates overpay. Now, I have to say that must be 15 years ago at least. So I think things have improved since then.
I have to confess, it's not by my experience that it's dumb money. Quite the opposite, in fact. I mean, the understanding of particularly the technical aspects that they brought was excellent. And the way it was always presented to us was much more, you build an investment case, as any VC does, and the strategic value is part of that, but it isn't a dominant part. So, you've got to have the right management, the right product, the right market, the right return, and for them the right strategic value, and it was part of the balance, but it wasn't a dominant one. And there certainly wasn't a point where they ever said we have to be in this, therefore we are willing to overpay, ignore shortcomings in the management and everything else just because we have to have it. That just doesn't happen. People
That's
talk
very
longingly
reassuring,
about a time.
Duncan. That's very
Well,
reassuring.
I mean, people talk longingly about a time when cash was just shoveled into people's waiting arms. I miss that. I've never seen that. I would love to have co-investors who are willing to shower money on the businesses I've invested in willy-nilly, but sadly it doesn't happen. I think it's probably unrealistic to expect it would. I mean, with corporates, one thing we did find, there was a shift in the strategy of the corporate, and that changed their investment appetite for the business they were involved with. They didn't withdraw, and it wasn't cutting off by any means, but I suppose when they were looking at the investment case, it removed that strategic element from it, and their evaluation became a much a simpler, more straight VC one. Will we make money from it? Is there a return to be made? Does that sort of shift happen often, or is it rare, or is it tempered?
Well, I think it does happen because corporations evolve and their strategies change. That's how corporations survive. As a corporate VC, that is an issue, or can be an issue, and the question is, how do you deal with it then? So one of the fair criticisms in the past of VC funds has been that corporate VCs may not be always long-term reliable partners, because if they're investing for strategic reasons and the internal strategy changes and a deal that was strategic is no longer strategic, what happens when that company comes to raise its next round of funding? Are you going to walk away? And I think the problem for the co-investors and for the company itself is, if a large corporation declines to follow on in the next funding round, people think, well, they're big XYZ corporation, they must know something that's not quite right here, and that can make it more difficult for the company to raise funding from other investors. So that has been an issue, but I think more and more corporate VCs realize that it may sound like a big world, but it's actually not such a big world, and you live and die by your reputation. So if you get a reputation for being an unreliable investor and an unreliable syndicate partner, guess next time you want to be in a deal with one of those people that felt that you let them down last time, guess what happens? You may be not very welcome at the table. So I think more and more corporates say, unless the company doesn't merit putting more money in because there are big problems, in which case the discussion is just the same as you would have, I think, Duncan, as a VC. People, even if it's not strategic anymore, corporates generally will follow the money. And BP Ventures, which is a very large, very active, and I think very well evolved corporate VC fund, they were just talking about their policy in exactly this situation the other day, and they will follow their investments.
Yeah, no, I mean, I suppose it's most like most things. You get different styles in VC houses, in VCTs, EIS funds. They all have different styles, but fundamentally they're all trying to do a similar job of assess the investment case, back the businesses that they believe have a good chance. And you do tend to find there are these misunderstandings around corporate VCs. I mean, it's something we encounter at DBW. I was talking to someone the other day, and they said, how would taking money from DBW be different from taking money from a VC? And they seemed somewhat startled when I said, well, not different at all. We are a VC. I mean, the bank as a whole has a wide range of interests. We have over $1 billion under management, and it ranges from property funds, microloans. We've been heavily involved in the coronavirus response from Welsh Government. It's entirely true to say that most of our funding comes through the Welsh Government, but the manner in which we invest it is as a VC. We don't make grants, we don't make soft money, we don't invest just because it creates jobs in Wales. We're looking for, like a corporate VC, we're looking for a good management team with a good idea that we believe has a good chance of success in a market that's going to justify it on terms that allow us to make a fair return. that's what we do. There were no there's no soft money attached to it.
Sorry, Duncan, I was going to say, I would imagine then that is very important, because we were talking about reputation earlier. If you have a reputation for being sort of soft money that backs companies that nobody else wants to put money into, once that reputation is earned, fairly or unfairly, once you're in a deal, people may not associate that as being a stamp of quality. Whereas the approach that you're talking about, I think, is that you are a VC investor that goes through the same rigorous due diligence as any other good quality investor. So if you're in a deal, that's also that's a stamp of approval, not something to raise a question mark about.
Absolutely, yeah. I mean, certainly we'd like to think it's that way, and I think I think we have a good reputation. We are. I think there's Bowhurst had us in the sort of top 5 or 6 active VC investors in technology in the UK, which, when you consider we only invest in Wales, is quite an achievement. We are very busy, but we're looking for the good investments. It can be hard because we are a gap funder. We are there to address gaps in the market, and there is a, I think globally there's been a pull away from the seed end of investment, and that's something we raised a second seed fund to invest in Wales to address that. And we are keeping an eye on the market and looking for where there are gaps and where we can fill it. But being a gap funder doesn't mean being a daft funder or dumb money. We're still looking for the good things, because we have limited resources, and it makes sense to focus those on the good opportunities, not the ones that have less chance of making a success. So that's certainly something that we try to do. I mean, as a corporate, how involved are you in the businesses and what they're doing?
Well, again, it's an important question, but it's also it's a question I think that any startup, when you're thinking about taking money from a corporate VC, it's really a question you should ask, because there are 2 roles I think for the corporate. One is as an investor, and you may or may not have a board position there. The other is the corporation, not the corporate VC group, the corporation, a business unit or whatever, as a potential business partner or development partner, whatever. And you've got to really keep those 2 things a little bit separate. I mean, the initial introduction may come from the corporate VC people, but after that, you don't want to share information as if you have a board position with your business that's confidential or may not be in the interest of the company, because certainly if you have a board position, your main responsibility is to the company. As a board member, which is different to your responsibility as a shareholder representing the corporate VC. So with it, I think any startup that's considering taking money from a corporate, you've got to think about, what is the role, what relationship do I want? If I took, just to take an example, if I took money from Unilever, would it inhibit me in doing business with Pepsi? No, for example, if you take, just as an example of two companies that are seen as competitors. So does that in any way inhibit you from doing business with the competitors of that corporate? And they're all good questions that you need to think about, and discuss with your board if you're the founder, and decide on what the right way forward is. But I think the way to address that issue properly is to go speak very openly with the corporate that may or may not become an investor, and find out how they're structured, what their objectives are, what their intentions are, and decide is this a matchup that may work or not. Or sometimes the answer is yes, it will, but not now. It might be at the next round, it might be a little bit later. So that it's a very important question that needs to be addressed.
I mean, I have to confess, I can think of I can think of one example where the corporate investor sat on the board, and there was a concern about information from the board seat flowing into the business, the corporate as a whole. And the VC put a internal Chinese wall up, so that the person who came to the board wasn't sharing information with the organization as a whole. There was a flow of some technical questions between the two, and that was very helpful because they could access the resources of the corporate, and the corporate VC could talk to his technical people who would confirm or not whatever he was being told by the business. But the information and the scientific advances that the company was making didn't flow into the corporate as a whole for that very reason.
I mean, that's encouraging. That's the way it should work. And of course, even if that is the case, it's always at the discretion of the board or the chair of the board to ask the representative of that company to step out of the board meeting for 10, 15 minutes, whatever the period of time is, whilst a particularly sensitive subject is being discussed. And I think people don't get upset about that. They understand that as well. So and in a way it covers the corporate as well from any allegation in the future that somehow information was misused. So there are ways to do this properly that should so this shouldn't become an issue.
Yeah, and we have the same problem, and we've got a portfolio just within the TBI team of sort of 60, 70 companies. Some of them are doing similar things. Some of them have similar underlying technology, albeit they're applying it in different areas. And we get it when people bring plans in. Someone will bring a plan in and ask that we sign a non-disclosure agreement to protect themselves against what's in it. But I suppose it comes back to reputation. If particularly in our case, if we're doing 40, 50 deals a year in Wales, which is not a big area and is a collection of people, most of whom know each other, if you're not behaving professionally, fairly, and with integrity, then very quickly you won't see the deals anymore. There's a short-term gain perhaps, but long-term you lose your reputation and brand, and that's just not a way to go. So, and I have to say personally, I can't think of an instance when I've sat on a board and thought that would be useful to another company I know of. You see scenarios, and certainly there are outside resources. Sometimes you'll sit there and think, actually, I know someone who's done a piece of work on something like this, who would be useful to come in and talk to the board and perhaps give them advice. So there's definitely an upside from having 70 companies that you've looked at. But I can't think of an instance when I've been able, even been tempted or had the opportunity to be able to help one company with information from another. It just doesn't happen that often. One question that does come up where we're investing with a corporate and was raised by the management is this question of sort of acquisition by stealth. So a corporate comes in and sort of has 20%, and then is kind of, they go up to 30 and then 40, and they're sitting on the board when something comes in and says, oh, we'd like to buy the business. And obviously the corporate VC is sitting there saying, well, someone's just offered 10 million for it. If I offer 10.5, it's mine. What's the corporate mindset from that? I mean, are you there to sandbag it and get it cheap, or are you committed to paying a fair price?
Actually, people that are not close to corporate VC, I think, often do believe that a corporate VC investment is like a precursor to an M&A. If you actually look at the data, Global Corporate Venturing's data, it shows that less than 10% of all corporate VC investments end up in an acquisition by the parent corporate. So yes, it can happen, and yes, you would probably have a better understanding of the company to inform your decision whether to make a bid for it or not to buy it than if you weren't involved. But it's relatively rare. So, corporates invest for a whole lot of other reasons, and that's not really the main one. The other important thing is, I talked before about some practices and procedures that maybe did not always put corporate VC in the best light in the past, which I think are largely behind the industry. And one of them was asking for ROFRs, so, rights of first refusal. Yep. So you make an investment, and if you ask to have some right of first refusal to buy the company written into the terms, what you effectively do is inhibit the value that the other investors can get, because who else is going to bid in seriousness and do all the work to put in a bid for a company if they know that somebody else can just match it, or will be told what it is and can match it. So, those terms are pretty poisonous for other investors and for the founders as well. And I think hopefully you won't find any corporates putting ROFRs, rights of first refusal terms, or trying to put them in, because usually, unless a company was desperate, I think they wouldn't accept that anyway. But that shouldn't occur.
No, it's not. It's not something I've seen for a long time. It's it is something that management get concerned about, and I think coming back to your point around confidentiality, it's about having an open discussion. I can think of several companies that have got corporate investors in, and the corporate's been very open that at the time of investing they are thinking of the business as a potential future acquisition. When we get there, again, because the interests are so clearly set out, there isn't a conflict you can't manage, because everyone knows what you're trying to do. And my response to the corporates is always, you are welcome to buy it. There's a process that'll go through, and if you really want it, all you have to do is overpay handsomely, and it'll be yours. But yeah, it's.
I mean, that's the right way to go. I mean, going back many years, it must be 15, 20 years, there was a time when Cisco were openly looking to invest in companies with a view to acquiring them, but at least they were open up front about that, so you knew it. But they are the exceptions, and you also get competitors investing. So when I was with Dow, the two biggest chemicals companies in the world were Dow and BASF, and we co-invested in the same deal together, actually, a UK deal. And often you'll find that corporations that at a corporate level, they're big competitors, can co-invest happily together in a deal. We were both minority investors, and and that, well, there were no problems with the co-investment. Actually, as an investment, it turned out lousy for all the investors. So it wasn't one that we shout about. But as an example of being able to co-invest in a deal with a competitor, with a corporate competitor, it worked fine.
Yeah, no. I mean, we when we invest, we have to have a co-investor alongside us, and normally we invest about, well, on a simple deal we might do half of it, and if we can do less, we have done slightly more, but in general we're sort of usually at about the sort of 50% mark, and corporate investing is an important part of that. And we do invest with VCTs, EIS funds, private individuals. But sort of corporates are an important part of that, and it's the experience to date has always been good. Just conscious of time, and we said we were going to talk about sort of investment in Wales and the UK in particular, or sort of Wales in particular. How do you think the UK is doing on VC funding compared to other countries?
I think very, very well. I think people always look to say what can we wave the flag about? What do we do well compared to other countries? So VC was born in the US, in Silicon Valley, and the US remains by far the powerhouse of venture capital. And just to put it in perspective, I mean, VC, we think of VC as often being small, million here, million there, but total VC investment last year, and it depends which data source that you take, but globally was somewhere close to $250 billion. So it's quite a lot of cash. So and the US for many years total VC investment in the US has been about 5 times total European VC investment. Wow. So for sort of roughly similar populations, there's a big difference. But when you look at European VC investments, the UK now accounts for over a third of all European VC investments. And last year, again in round numbers, UK was close to $15 billion of VC investment, which is more than France and Germany, who are the next largest two combined. So the UK is really a real powerhouse when it comes to Europe, when it comes to VC investments, and that gap has got wider and wider in the last few years. So I think the UK is doing pretty well, and of course that VC investment feeds startups and growth and everything else. So it's a pretty positive scenario.
Okay, and those are countrywide figures. Is it, and this is sort of a complaint you hear sometimes, that yes, the national picture is big, but all that funding is going to London and the M4 corridor. It's not finding its way out to the regions. Is that true, or is that not? Is that not?
Well, it's true that London dominates, or that London area. Certainly, if you talk about the Golden Triangle area, I think around 50% of all VC funding goes to companies in London. But that still means that the balance that's outside London is still a pretty big pot. And it's interesting, if as I said before, VC was born in Silicon Valley. So all the other states around the US have tried to replicate the Silicon Valley model for many, many years, and attract VC and stimulate startups, and they've done very well. But still, Silicon Valley, California, certainly, if you include LA and everything else, accounts for close to 50% of all US VC investments still. But as everything progresses, so if London is successful in attracting VC, there's a knock-on effect for the rest of the country as well. So I think there is a lot more venture capital investment going to all other regions of the UK, including Wales and Scotland and Northern Ireland and the north of England, etc., than there was in the past. So I think London will continue, I think, to have a dominant position. But as the whole of the UK is improving in terms of its ability to to attract VC funding.
There's a lot of talk at the moment, and it's not just about funding, it's also a much wider debate about levelling up and support for the devolved nations. And I suppose the other thing that has happened is, the last 18 months, the pandemic, has seen people working from home, and home doesn't have to be in London. And anecdotally, I know quite a few people who have said, actually, if I can do my job from home in London, I can do it from home in other countries around the UK. Do you think that's going to push funding out and people out?
I spoke to a fund just recently, and the lady there said to me, the last 5 investments we made, and we're making pretty early stage, seed, early Series A investments. So the last 5 investments we made, we have not met the founders face to face. Now, in the introduction, I mentioned that I invested as an LP in funds for Dow, and the thought of investing in or considering investing with a fund manager that says, we invest in companies and we've never even met the management team. You just said, are you crazy? What are you talking about?
Management is the key thing.
Of course it is, but it's amazing how quickly the industry has adapted and found ways of doing. It's maybe not quite the same as sitting face to face with somebody, but certainly finding a way to make intelligent decisions about whether you put money in a new company or not, based on Zoom calls and type of thing we're doing now. So I think what that does mean, of course, is that location is perhaps less critical, and it shows that people can be flexible. And when we talk about foreign investors, flying in and that, if you're able to do things remotely, it doesn't really matter. In fact, you might be investing in a company that may be based in London, but the person that your main contact is could be sitting somewhere else completely in the country. So with the way it is at the moment, so I think that whole leveling up. You mentioned leveling up. I have to say, having had nothing to do with government at all for most of my career until this role with DIT, when you hear announcements like that, you sometimes wonder, what does that translate to in terms of real action, or is this just political rhetoric?
Yep.
What I've seen is there is really a very clear and consistent message, certainly throughout DIT, for everybody to do what they can to put into practice the desire to find opportunities to stimulate, to help, to support, whether it's investment or trade or whatever the topic is, in the devolved regions, in the other places around the country. So I think there are real efforts, and indeed, we're looking. Again, it doesn't do anybody any favors that we take poorer quality companies that would not be of interest to an international investor simply because they come from Wales or Scotland. But we're doing more and more to try and find, are there real good companies that we may have missed before in those regions, and can we support them in terms of investor contacts? So yeah, I think that trend is definitely not negative when you're located outside the London area.
I mean, something we've seen in some of our businesses, particularly when they're trying to recruit or with their existing workforce, is that there are people with valuable skills in Wales who are saying, actually, suddenly people in London have realised that I can do work for them at outside London rates, or somewhere in between. So they are able to sort of go and work in London, and effectively the local companies are struggling to find the resources they need. Equally, they can reach out effectively globally now, anywhere with an internet link, and find people, which is something that's been going on using development and all the software expertise in India and the like. But it kind of extends that further. I mean, my thought was business never has been easy. Funding businesses has never been easy, and running a business has never been easy. It's a different set of challenges that your workforce is now one that you can pull globally from, but also the people locally can be pulled globally as well. It's a different set of challenges, but it never was easy, and it never will be.
Yeah.
It's a lot to go for. Just conscious of time, but I mean, when you're going to investors in North America and the Asia, what do you say to them in terms of why they should be looking at Wales?
We don't, because when I'm sharing a company with an investor that I know that what the company is doing is at least in the interest scope of that investor, unless what we normally share is some key bullet points that just say, what is the company doing? What's unique and valuable and special about it? How much are they raising? What stage of development are they at? So, just keep on. And then maybe just a 1 or 2 page teaser or something that's, from the company that summarizes what they're doing. But, this is DIT, so these are UK, there has to be a UK company. But usually I wouldn't specify which part of the UK they're in. And it's not a question that investors tend to ask. Eventually they would ask the question, particularly if they want to come and meet the company. But I think they are not really bothered where the company comes from or where its headquarters or where its location is. They want to find great companies that they can invest in. Yeah. And so in that respect, we would welcome, every great company from Wales that we can find that we could promote to investors. And indeed, there are 1 or 2 investors that have said to me in the past, there's a lot of investors mulling over and looking for investments in London and that area. We know that there are great deals around the rest of the UK. Can you show us some of those? So sometimes we even get that request from an investor.
Yeah, And that's probably a good point to wrap up, because I think the reality is it's never easy finding funding. It's never easy doing a business. But if you've got a cracking opportunity and a good management team, there are funders out there, DBW in Wales, corporate venturing, and further afield, who are looking for investments to businesses to back and things to do. So definitely something that people should press ahead with.
I agree. And talking about great opportunities, good luck to Wales against Denmark.
Thank you. That sounds like a point to bring to a close. Paul, it's been fascinating to pick your brains on your experience, both in corporate venturing and more recently at DIT. I know we've joined one of your programs for the biotech, so I hope we'll be talking again in the future. It's been a fascinating talk. Thank you very much.
Thank you, Duncan. Really enjoyed it. Thank you very much.
That's good. Thanks.
Bye-bye.
Thank you for watching. Rewatch all of our sessions online. Thank you to our partners.